Perfect. So going ahead and getting this call officially started and introducing myself. If this is your very first time being on a call with myself or even listening and learning from a training from myself. My name is Joshua Wheaton. I've personally been trading and investing for the past 4 going on 5 years, I believe, at this point. And it's been an extreme blessing, the power of, understanding money, the power of knowing what to do with your money.
You
Is
don't
something
count
that I feel
facts,
like is
but
very
I send them over.
replaceable.
So I
And if y'all can please make sure that you don't, actually, I'm gonna just turn off the ability. But I feel like it's something that is very much irreplaceable, something that really shouldn't be taken lightly. When it comes down to trading, me personally, I got into it simply because, I know what it's like to work a job. I've worked different jobs and I know what it's like to make a lot of money outside of a job. I used to resell sneakers and I felt like that was like my introduction into like investing really because I would buy a sneaker when it was brand new coming out cheaper. And I would wait till the shoe sells out and I would sell it for more money. And so when it came down to the aspect of trading, I'm like, okay, I could do this with money from my phone. Like I'm interested in that. But for everybody has a different learning curve. And that's the biggest thing that I always like to let people know. People ask me sometimes, like, well, Josh, how much could I, make? What do you expect for me to be able to make? If I got started today, what can I do? And it's like, well, I don't know what you can do because I don't know your work ethic. I don't know what type of learner you are just yet. I don't know how fast you pick things up. And I don't, it's a process for every single person. But what I am very confident in is that the process is going to be worth it. Imagine never going through the process of learning how to drive your car. And now you got to wait for a ride every time you want to leave the house. Like that is a big inconvenience. And so trading is exactly that. Not knowing how to move a car is the same thing as not knowing how to move your money and let your money work for you. Let your car get you to where it is that you want to be. If you don't know how to trade and invest, then you don't know how to let your money work for you and get you to where you want to be. And so the biggest thing that I feel like a lot of people focus on so much is the income opposed to the input, if that makes sense. They focus on, okay, how much can I make opposed to understanding what they need to put in. Until they focus on the input to actually get the money. And so this training, as you guys could see or seen from the flyer, it's about account management. And so I'm going to be diving a little bit deeper into, helping you guys develop a specific plan. Because for me personally, I was making very much inconsistent money when I didn't have a plan. I would make a lot, lose a lot, lose a little, make a lot, lose a lot, make a little. And I'm just like, okay, well, how do I get consistent with my results? And in order to get consistent results, you have to have a consistent plan that you follow. So what I'm going to do is I'm going to go ahead and share my screen and I'm going to break down with you guys, this account management training. And just go ahead and just drop a one in the chat box below and let me know if you guys can actually see my screen. Everything should be coming through clearly for you guys. Perfect, perfect, perfect. All right, so starting this training off, you guys. Again, like I said, we're here to talk about account management. So I'm just gonna break down the different factors and important aspects of account management, and what you really want to focus on to actually get the results that you personally desire. So when it comes down to a trading account, you guys, it's simply where you keep your capital. It's simply the money that you're actually investing in. So as I dive into this, I want to kind of give you guys a perspective that was given to me early on in my trading journey, and that is whatever you personally choose to put into your trading account, you must act like it's already gone, right? What do I mean when I say that? When you have your bank account, you're looking at it like, okay, this is what I got left to spend. Okay, well, this is just what I have, right? And you're swiping your card and you're just pulling away from that. When it comes down to your trading account, this is an investment, and investments take time to bring a return. Sometimes, people will come in and they'll make money in their first day trading. That is more than possible, right? But in order to, grow that money in the long run, you have to look at the long run of that money and not just look at it like how you look at your bank account as daily disposable and income. Like you want to take all your emotions and attachments to the money in your trading account and act as if you don't have it. One thing I used to do, and it used to cause me to be very, very emotional, I would put money into my trading account that I couldn't afford to put into my trading account, right? Then On top of that, I would add my bank balance with my trading account balance with the money that's in this Apple wallet versus the money that's over here, plus the money I got in cash. And I'd be like, okay, well, I got about good $2,000 on me. When in all actuality, that's $700 that was in my trading account shouldn't have been accounted for. Then I would take a loss and I needed $2,000 to cover bills or whatever amount to cover bills. And now I'm losing money from the money that I accounted for the amount of money that I had. And now I'm getting very, very upset and bothered by the money that I'm losing. So when you pull your emotions away from the money and you kind of look at that trading account as, okay, this is a long-term investment and I know I'm not really supposed to touch it. I know that it's not really supposed to do anything for me right now. Then it's a lot easier to be okay when you're taking losses. It's a lot easier to not be super duper excited and start to get greedy when you're starting to see results. You're able to say, okay, this is what this account, like imagine if you gave somebody else your money to trade. That's how I want you to treat this, right? If you gave somebody else your money to trade, or you gave your bank your money and put it into your savings account, and they told you 3% per year or 1% per year, you're not checking that account every day, counting the dollar amount per dot. No, you're checking the percentage. You're checking the overall growth, and you're not checking it daily. If you already know it's 1% annually, you're not going to check every day because you're going to just disappoint yourself knowing that you're not going to see much progress at all, if any. So when you put that money into a trading account, you have to have a mindset of, okay, what are my goals? What is my trading plan? What am I looking to do with this money? And the only time you really check in on it or even start to maybe even feel a way about it is after you've reached the time. Meaning, if I start this week trading and my goal is to make 30% a week, okay, I'm not going to check up on my 30%. Yes, I'm going to say, okay, well, I only need 3% left. But I'm not going to sit here and stress about the dollar amount until the end of the week. And then I'll say, okay, I fell short of my 30%. Now I'm going to go into the next week and still look to reach the goal. But when you're just every day, money, 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 dollar sign, and you're just counting the dollars, you're losing sight of the overall picture. And that is percentage. Okay. That is percentage. So, capital, the amount of money that you start off with as a trader will determine the type of results that you should expect to make. Okay. I know a lot of people that are like, okay, well, if I put in 200, I should be able to at least get 100, right? It's like, no, no. Put in 200, you're going to make a percentage of that 200. You're not going to just flip that 200. You're not just going to risk the entire 200. This is not the casino. So if you must start trading right away, you could begin with as little as $100. But for a little bit more flexibility, and what I recommend for people that I personally mentor and work with is start off with a minimum of $500. But if your goal is to really say, okay, I want to see trading start to make a big impact in my life sooner than later. I want trading to start competing with what I'm making at my job. I want to start to make almost what I make there. You're gonna have to have at least $5,000 into your trading account. Some of you guys have the goals, but don't have the balance to match the goal. And at that point, we are operating out of delusion and luck, right? How many of you guys know that delusion and luck ain't guaranteed? Like you could fake it till you make it, but only for so long. Luck. How many of you guys want to bank your financial freedom off of luck? So if your account balance isn't matching with the goals that you're having, you're not even operating in a realistic reality standpoint to actually reach the goal. So next is lot sizes slash your trade investment. So a lot size is a conversion of currency units that expresses how much money you are investing into a single trade. Okay. And right here is like a little diagram that kind of breaks it all down. So this is the terminology of the unit. So when you think about um a quarter, right? A quarter, we all know that that's the name of it, but we know that it's worth 25 cents. When we think about a dime is worth 10 cents. A nickel is worth 5 cents. A nano lot is what you're investing into the market, but that is worth 0.001 in volume, 100 units, which is only a penny. This isn't even available for most brokers for you to trade. So the ones we focus on is micro, mini, and standard. A micro lot is 1,000 units. It's a zero point zero 0.01 in volume. So when you're taking the trade on the app, when you're taking the trade on the website, you're going to type in 0.01, and that's going to be equal to 10 cent per pip. Pip is simply the point of percentage in the market. This is calculating how the market is moving. Okay. So every time the market takes a step in that right direction or the wrong direction, 10 cents will be multiplied either negatively or positively. If you do a zero point zero 0.02, you're just going to move the one and change it into a two. So now that's 20 cents. 0.03, 30 cents. 0.04, 40 cents. A mini is now 10,000 units, a 0.10, and that is equal to $1 per pip. So your money will multiply $1 every single time in the positive or in the negative, depending on how the trade is going. A standard lot is 100,000 units, 1.00 in volume, and a $10 per pip investment. And this is where I was messing up early on in my journey. I didn't understand how to convert it. Okay. So when you're looking at the volume or you're taking the trade in the app or on the platform, you're going to move the decimal one place to the right to find the dollar form. Because I was doing, 0.10 and thinking that was 10 cents, and I was really investing $1 every single time. And then my trading account would start blinking because I'm over leveraged and I will margin out. The trade wouldn't even hit my loss, my stop loss. It would just pull me out because I was putting more than what I could handle. And this is what I mean when I say you can't just flip accounts. All right. If you got a $200 account and you think you're going to put the whole $200 in, it's not even going to let you take the trade. And then if you put as much as you could put in and it goes a little bit in negative and it starts to get close to that negative 200, you're just going to lose your 200 in the process. So we have to percentage wise manage our account. Okay. So the next thing is risk management. Okay. With risk management, proper risk management is the most important thing to master when it comes down to being an investor. I want you guys to think about it like this. You ever you guys ever bought something at a like and you had to what's the word? What's the word? Negotiate. Anybody ever bought something and had to negotiate? Right? Like I did this a lot when I sold sneakers. I would have $500 in my pocket and he would want $300 for the shoes. And it's like, yeah, I could give him 300, but do I want to give him 300? He want 300. I'm gonna say, what about 240? All right. Then he like, nah, bro, that's too low. That's too low. 280 is my lowest. And I'll be like, bro, come on, rock with me, bro. Do 250, bro. 250. Then he like, that's all you got, bro. I'm like, I mean, I might have an extra $10, but if you got the extra 10, bro, that's the lowest I could do, 260. And I just brought him down all the way I brought down $40, right? So when you're trading in the market, understand you are negotiating with the market, right? They know how much money. The broker, they know how much money you got. The market, they don't care how much money you got. They're willing to take it all. So if you don't have this is all I'm gonna put towards this. If you don't have a risk management plan, you will literally that's like me walking up to the guy, yo, I want to buy your shoes. And I open up my wallet and show him that I got $500 and he want 300. He might say, give me 350 because he knows that I have it. He might say, give me the 300. I'm not lowering the price because I know you have it. But if I tell him I don't really got it, but this is what I could work with, then I give myself a little bit of wiggle room to kind of, get my way. So if you're coming to the market with $200 and you allow your whole and $200 to be exposed to the market without having a risk plan, you're going to get your money taken. You're going to get more than what you want to get taken. So many people sometimes focus on making the money that they don't protect themselves to make the money. So they make the money at some point, but then they lose everything that they made. There is no reason why you should start the day, win a trade, and profit, and then give that money back to the market. You just made 2%, 3% in a day. Why are you re-exposing your entire account back to the market? If I just made 3%, I'm only gonna put back if my goal is 7% and I just made 4%, 3%. I'm not gonna risk 3 to 5% again. No, I'm only gonna risk 1% into this next trade if I ever even take a trade again for the rest of the day. The long-term game in investing is about being what's the word? You want to be cheap. You want to cheap your way to success. Because if you don't have the capital in your account anymore, you can't grow it no more. You can't build it no more. You got to keep refunding it now. You want to be a cheap investor. Don't be cheap in terms of education. Don't be cheap in terms of the things that really, but when it comes down to money that you can lose, not an investment in yourself. You can't lose unless you just don't take advantage of what you're investing into yourself. Buying that book, that's not, you don't want to be cheap with buying a book, buying a course, buying something that could add value into your life. But when it comes down to a market that does not care about you, when it comes down to a market that thrives off of taking your money, you should not expose your cards. All right, keep your hand up and play smart. So when there's no proper risk management, there is no safety. There's no safety. Okay. So how do we play this safe? I'm so mad with myself. And I'm gonna be honest with you. That's how this is why most people give up in trading. Because at moments like that, they don't fix the problem. They just give up. Sometimes you got to be so disgusted with yourself. Like, why do I keep doing this to myself? I've been there. I'm like, bro, I be doing so good, and then I just mess myself up. It's like you're your own enemy until you just make a conscious decision to just stop being your own enemy. Like, all right, let me stop doing this to myself. It ain't Forex. It ain't my mentor. It ain't the trade. It's me. It's really me. I like that. That's why, honestly speaking, you guys, I don't call out a lot of trades on a regular like that I can. And I've had this conversation with Steve. The more trades I call out, the more opportunity we have to lose. All right. The more opportunity we have to lose. So why do I want to put people in a big position to lose? And the biggest problem is a lot of people don't look at their account balance and say, how much should I risk? They look at the trade and they take the trade and say, how much can I make? And they focus so much on making money that they're not paying attention to the risk. So when the trade loses, they're mad at everybody and their mama but themselves when you had the ability to only lose $3. It's your fault you lost 200. It's your fault you lost 500. It's your fault you lost $10. It is your fault every single time. Even if I call the trade, it is your fault. One, you didn't have to take the signal. Two, you should have known what you were risking when you took the signal, and you should have been okay with it. And if you wasn't okay with it, to where you're mad at yourself or you're mad at the world, you should not be risking that much. You need more money in your account. You need more money in your life if risking $6 to $10 is going to make you upset. You need more money in your life if risking $15 to $25 a day is going to upset you. It's going to make you question whether trading is for you. You need to go get more cash flow. And if risking $15 to $25 isn't enough to make you the money that you want to make, you still need to go get more money. Some of y'all might say, Josh, I got a $200 account, but I don't mind risking 15 of that $200. That doesn't matter. You're not supposed to do it. You're over leveraging. You could only take a $15 loss so many times with a little bitty $200 account. And this is no offense to anybody with a $200 account. I've grown $200 accounts properly. But when you move improper, you guys, you're thriving off of luck. I've had people, and I have people in my business who make thousands of dollars. This is why you don't ever be in a group chat with people and look at what other people are making and be so excited, because they'll make that today and lose it tomorrow. Because they're operating off of luck, not strategy, not planned out, not with any direction or safety. So I sit there. I'm not gonna lie. Even me, I got a big account, and it'd be days where I still make $100, and I see other people in my group chat making 600, and I'd be like, bro, I know they should not have made that, but okay. All right, have fun. Keep it up, I guess. Just don't come yelling at me or nothing like that. Did you join my account management call? No? Okay, well, that's, you know. So this, you guys, it's not fun. It's not super duper exciting. It's not super duper risky, but this is safe. This is better for you. You know what I mean? You know how like everybody would love to have, that big greasy burger, the all the fried chicken in the world, all of this, all of that, the cheese, the carbs, all of that. The broccoli is so bland, it's so basic. But guess what? 10 years from now, 20 years from now, you're gonna be grateful that you ate the broccoli. We gotta focus. And I was having this conversation because my business is booming right now in South Africa, right? We're expanding in South Africa, something crazy, Cape Town to be exact, right? And I was having this conversation with an older person. She's like 34. She's in business and stuff like that. And I was talking to her. I'm like, everybody just hears, being a content creator, being an influencer, and they just think that they just should deserve money. Even people in the United States. I got an assistant who lives in India. She's an architect. And before she ever made a dollar, she put in more work than any of my other assistants did ever. Right? Because here, and a lot of people, they got the mindset of what they want so much opposed to focusing on what's going to give them what they want in reality. You focus on your wants and your goals so much, you're delusional. When you focus on the action and you do the action, you're going to get it. Okay? So don't be blind by the goal and not maintain the 3 to 5% risk. So the formula, you want to take your account balance, you want to multiply by 0.03 or 3% or 0.05 or 5%. You want to stay within the 3 to 5%. And you don't want to say, oh, well, Josh, I did 3% today and I lost that 3%. So I'm going to drop down to 1%. No, consistency. And if you want consistent results, you need a consistent risk. If you want consistent profits, you need a consistent risk. Don't jump the risk meter. Oh, I lost 5%. That kind of did a little damage to my account. Let me go to 2%. Then you win the trade that you risked 2% on and didn't make as much as you could have made because you risk less. And now your losses are bigger because you're losing the bigger risk and you're winning the smaller risk. You have to stay consistent in everything if you want the outcome to be consistent. Does this make sense? So account balance, $100 account, $3 to $5 per day, max. It's not fun. It's not cute. Go get more money. Respectfully, I say this with love. $200, $6 to $10 a day. You don't like it? Go get more money. $300 in your account, $9 to $15 a day. And a lot of you guys, you have kids, you have a future that you really want to reach. You have to think about that when you start thinking about over leveraging. Like every time you make a decision to over leverage and you take a loss and you got kids, you're literally taking food out of your kid's mouth because you're being greedy, because you don't want to follow your plan. What's more important? This is the type of way that I make myself think so that I do what I need to do. I got future kids right now because I'm too busy over here over leveraging. My trading plan could have had me at $1 million by now, but I've been too busy being greedy in the moment. I promise you, when you trade for so long and you think about all of the over leveraging of the year ago, a year ago, 2 years ago, you'd be like, man, I would have been so far if I would have just settled for the $15 a day. Let's talk about it. Some of y'all go for $100 a day, 200, 300, 600, $15 a day, 30 days in a month, right? 15 times 30. That's $450. It's some of y'all make 1,000, lose 200, lose 400, lose 500. Now you're in the negative. Then you make 1,000 again. Now you back break even. Then you lose $30, $50. Then you end the month with $30. You end the month in profit, negative $100. When you could have just made $15 a day, which was what was correct for you to make, and you could have left the month with $400 profit and the initial balance. You guys, it's like the market. Every gap in the market has to refill. Every shortcut you take in this business and in trading will refill. It will correct. Just like the market. When the market do something it ain't supposed to do, it's going to recorrect. You trading in ways you shouldn't trade, it's going to recorrect. I promise you. I don't know. I think God got like little trading angels out here that's like holding us accountable or something. But it never lasts. I promise you. You take the shortcuts, you get some good success. You might be on fire for a month. I had mentees that was on fire for a month, and I'm like, yo, like slow down, like calm, chill, follow the plan. Man, Josh, I ain't gonna lie, I got the strategy, bro. It's just hidden. Like I'm good. 2 months later, they're not in the business. Okay? Drop in the chat. Let me know. Are y'all here for longevity or are y'all here for quick? Y'all want quick or long term? Let me know. If you want quick, do the complete opposite of what I'm saying. But just know quick won't last long. If you want longevity, be patient and do what you're supposed to do. Listen to yourself. Okay? So, next, trading plan / your investment goal. Now let's talk about the goal. But I'm gonna be so honest with y'all. If you use the harmonic scanner or you trade with the strategy that I use or Steve, you're always gonna probably make more than your daily goal and more than your weekly goal if you follow the 3 to 5% risk management. Like it's just inevitable. Like sometimes it's just like, dang, I was only supposed to make $15, but it hit my TP and I made 60. Ugh. But I still only risked $6 to $10. I'm good. It happens a lot. And then if I make what I needed to make for the next 3 days, guess what? I don't stress trading the next 3 days. I'll look at the market, and if it looks super duper good, I'll risk. That's when I'll risk low. If I'm already up on my daily goal or my weekly goal, then I'll risk 1%. But if I'm still trying to reach the daily goal and I made a percentage, I'm not going to risk the entire percent and some. No, no. Why would you do that? All right. Weekly goal, 30%. The formula, take your account balance and multiply by 0.330 or 30%, and that's going to give you your weekly profit goal. I trade 4 days throughout the week, 3 to 4 days. If I trade 4 days a week and I'm looking to make 30%, that's 7.5% per day. If I have $100 account, you got $100 account, your goal is $30 for the week. Josh, but $30 not going to change my life. $30 4 times a week is 120. Depending on your membership, your fee is covered. So you could stop stressing about investing in yourself. Like you don't pay the rent to invest in the lights. Like you don't pay, rent to invest in the roof over your head. Don't pay lights to invest in the lights. You're paying for this education to invest into your knowledge, your experience, your growth. It's not a fee, it's an investment, right? So if you could just make enough to cover that investment, right? Big shout out to Dawson. I know Dawson ain't paid a monthly fee out of pocket since he got started, right? My mentee Dawson has not paid a monthly fee since he got started. So many people are like, oh well, I don't know about joining that company and paying that fee. Are you crazy? Are you crazy? It's the fee that's making us money. It's the education. It's what's behind the fee that's getting us paid. While you're taking stupid, unnecessary losses without the education, trying to do all bad by yourself and take the shortcuts, it's gonna recorrect. Then a year gonna go by, you like, man, I should have just bought that course. Look at everybody who bought that course and actually used it, obviously, because you could buy the course and still not use it. But $100, 30, $200, 60, $300, 90 a week, $400, 120 a week, $500, 150 a week, $1,000, 300 in a week, $3,000, 900 in a week, $5,000, 1,500. Some of y'all got $500 accounts trying to make 1,500. That's where you messed up. You got $1,000 in your account trying to make 1,500 in a week. That's where you messed up. Right? And think about it. In the long run, you'll get to your goals a lot quicker, right? You got $1,000 account and you make $300 a week. You make your weekly goal 4 times within the month, 4 weeks in a row, right? 300, that's 1,200, right? So you got 1,000, and you profited 1,200. Now you got $2,200 in your trading account. Your new 30%, right? Your new 30% is now $660. You're now making $660 a week after the first month, opposed to $300 a week. But when you got $1,000 account and you're trying to make 900, and your $1,000 account dropped down to $400, and now your weekly goal is only 120, but you still trying to make the 300 that you were supposed to make in the first place, you're digging yourself down a hole that is just going to be like impossible to come out of. And if you keep that habit up, your account will reach zero. And one thing I've learned is it can go in the negative. Nothing crazy, but it'll go like $2 in the negative. I've been there. I'm like, bro, what? So they finna like call me? Like they finna ask for this money back? Like how does this work? You know, you've just fund up. If you put $100 in your account and you negative 200, you only gonna see 98. So, how to be a smart trader? You want to calculate your pips and find your risk and reward before you take the trade. You always calculate before you take the trade. Imagine, jumpers, right? Let's say you are, or not even jumpers. How can we do this? Let's say builders, construction workers, right? They don't calculate how big, how big the door should be. All right. They don't calculate that. They just start building the house. They're like, oh boom, let's get to work. Let's build. That's how y'all learn y'all trading account. Let's just take the trade. Let's just make some money. I'm in. Took another one, doubled up. All right. Set another entry. All right, whatever. And you just looking to make money, but you didn't calculate. So guess what? When you come down to that house getting built, that house is not going to be built correctly. When it come down to you seeing results, you're not going to see the results that you want to see. All right? You're going to try to put that door in, and then there's going to be a big old gap. And then you got mices and, field mice, whatever, bugs, mosquitoes flying right up under the door and coming all up in your house. All right? Because you didn't calculate first. So you want to calculate your pips, find your risk or your reward. So the formula to doing this, you guys, I'm not going to go too deep into it because I do have another meeting. But take a screenshot of this, practice it on your own, do different examples in a group chat, ask people in the group chat what they think, if it looks correct, that's what we're here for. Also, new chats launching. Be on the call tonight. I'm done dragging dead bears up trees. I'm done dealing with no energy, but people want everything, want one-on-ones. It don't even show up. I'm done. I'm so done. New chats. I don't care if it's 3 people in the chat. We building from 3. So I hope y'all are excited. Hope y'all looking forward to it. But yeah, I don't care, y'all. I'm sorry. I'm so over it. But now, when it comes down to it, step number 1, right? If you're trading Forex pairs, this is different if you're trading crypto and other stuff. And also, if you're trading crypto, you should have at least $500 to $1,000 in your account before you trade crypto. You're trading gold, you need at least $500 in your account. You should not be trading gold and crypto with little accounts, especially if you only have one account. I don't trade crypto and Forex in the same account. The crypto market is way more volatile than the Forex market. The spreads are way different. So you're catching Forex wins, but taking crypto losses, good luck. It's going to be hard, inconsistent. Trade the same commodity. Is that the word? No, trade the same asset category in the same account. You want to focus on gold and for 2 different accounts. Gold, gold isn't too bad to trade with your Forex account, but crypto, I would not recommend it. I would have a whole separate account. That's one thing somebody who made 6, 7 figures trading told me. Have multiple accounts for different asset categories. All right. Indices, definitely don't trade that in a Forex account. Oh my God. You're going to be an emotional wreck, right? So remember, the formula stays the same no matter what, okay? This is for Forex pairs. The 5th digit and beyond does not matter. Step number 2, write it down. I'm telling y'all the steps. It's going to make a lot of sense. Step number 2, line up the numbers. And this might be a little bit more childish for some people who feel like they're just so advanced, but I'm a steps type of person. That's how I learned how to do this. Now I could just look at the numbers and figure out which place I need to focus on and stuff like that. But this is what made me confident. I'm here to build confidence. I'm not here to sound like an expert. Okay. So step 2, line the numbers up and delete from top and bottom the numbers that match from left to right. Just write it down. It'll make sense in a minute. Step number 3, find the difference of the numbers that are left. Step number 4, you want to find the lot size, test the lot size to check for the proper risk management. Your reward, again, your reward will always be a byproduct of your risk, meaning whatever you could afford to risk is going to be a determining factor of your reward. If you don't like the rewards you're getting, get more money in your account so that you can risk more. Okay. Not more money that you're going to cry about when you lose. More money that you don't care about. And the only way that probably happens is if you start making some more money. Okay. So now this is an example. All right. I got a $500 account. I'm going to only risk 3 to 5%. That's $15 to $25. The trade that I get, Euro USD sell idea. This is my entry. This is my stop loss. If I'm looking for my risk, I only need my entry and my stop loss. Write that down. All right. When I'm looking for my risk, all I need is my entry and my stop loss. Take profits does not matter when I'm looking for my risk. Now, when I am looking for my reward, my entry and my take profit is all that matters. I need to know from the market here to my goal, how many pips. From the market here to my stop loss, how many pips. That's what we need to figure out. Okay. Then when you got multiple take profits, take profit 2 does not matter. You don't calculate from here to here. No, stop loss does not matter. Entry and wherever the next target you're looking for. Wow. Right. So step number 1. All right. Let's go back to our notes. And this is what I want you to do because practicing it is going to make it stick. Right. And when you follow the steps, you know the steps. So don't just get to it and just start guessing steps. No, read it off of your paper. Like I literally did this for like 2 weeks and then I finally got it. It stuck. Right. Step number 1, the 5th digit and beyond does not matter. So now I'm going to take my entry 1.06356. Right. 1, 2, the 5th digit after the decimal. 1, 2, 3, 4, 5. The 6 no longer matters. I'm going to delete the 6. All right. From my stop loss 1.06650. The 0 no longer matters. So the action that I took in step number 1 was I deleted the 6 from the entry and I deleted the 0 from the stop loss. So now I'm going to be left with this number without the 6 and without the 0. Now we move on to step number 2. Step number 2, right? Don't guess. Read. Line the numbers up and delete top and bottom numbers that match from left to right, like you're reading a book. We lined the numbers up. We deleted the 6 and the 0. So now we lined them up, all right? Don't matter which is on top. It does not matter. The numbers are in the same place. We're going to delete them from left to right, same place. 1 and 1, match, delete. 0 and 0, match, delete. 6 and 6, match, delete. 3 and 6 does not match. This is the number that we're left with for our entry and our stop loss. Now, step number 3, find the difference. So now we're going to take the 35 that's left and the 65 that's left, and we're going to subtract that. We're left with 30, not 0, right? We're left with 30. So that is now letting you know that with that Euro USD trade idea that we originally looked at, right, there's 30 pips being risked. And I know that I only have $15 to $25 available to risk, and there's 30 pips that that's in between the entry and the stop loss. So now what I'm going to do, and I'm going to just stop at that example. So what I'm going to do, the easy way to do it is to say, okay, let's say you're going to do your 5%, all right? Let's say your 5% is $25. You can divide the pips. So $25 divided by 30 pips is 0.83333333333. Okay? So what that means is I have enough money, well, for my max to be $25, I can only invest 83 cents per pip before it reaches $25 because it's 30 pips in this stop loss. So I can only risk 83 cents. You can't risk 83 cents. You could risk 80, you could risk 90. There's no pennies in trading. Okay? So you do the whole number in the tens place. So 0.08, which is 80 cents. So knowing that our max risk is $15 to $25 with a $500 account, the largest lot size that we could enter this trade on is a 0.08, which is 80 cents. 80 cents times 30 pips is $24. That keeps me below my 5%. Drop a MS in the chat if that makes sense. And vice versa for the take profit. You just do the entry number and you do the take profit number and you find out how many pips. Your lot size will determine how much you make. So once you figure out your risk, your reward, it doesn't matter. You don't have to recalculate how many pips could I put in for my reward. Like how many pips? No, your reward should always be greater, right? Your reward is always going to be bigger. So this is a reward example. 77 pips after we did step 1, 2, and 3. 77 pips. We already know that we're risking $24 because we did a 0.08. Now you take your 0.08, which is 80 cents, and you multiply by the 77 pips, you're going to make 61. You're risking 24 to make 61. Perfect. Perfect. That's a good trade. You lose that twice, you're still profitable. This is why you want to be consistent. If you risk $24 3 times, 24 times 3, you can lose, right? Well, not 3 times. You could lose this trade that's what I meant to say. You take this trade 3 times, right? And you lose twice. You lose 2 more than you win. You only win 1, you lose 2. You take 24, you times that by 2, that's $48. You win this trade setup 1 time and you make 61. So you take a negative $48. Josh, I lost $48. Take the trade again. I don't care. Did you go over your 5%? No, well, that's a win. You won by following your trading plan. You got negative $48. Your balance is now down to what? 500 subtracted by 48. Your balance is at 452. You started at 500. You win the third trade because you wasn't in your feelings. You understood that was a part of the process. Now you make 61 from hitting TP1. You was at 452, you made 61. Now your account balance is at 513. You're in profit, $13. That is a win. And don't look at I remember I meant to tell my guy Jeremiah this, right? Don't count to yesterday's losses as where you are as like a loss today. No. All right. I'm not saying this as if that's something wrong, but I used to do that. I used to be like, oh, I lost 3% yesterday. I lost $200. I got to make that back today. No, you got a $300 account and you lost 50. Your new balance is 250. You start fresh every day. Where am I at? 250? Okay, boom. From today, this is where I need to be. Don't hold that dead weight of what you lost before, because then you're not even going to be mentally prepared to catch a win. You're going to be playing revenge with the market opposed to playing fresh, right? Think about the person who got anger in them. They're not operating at a level out of the right energy. You got anger in you. You trying to win. Yo, you're deflecting everything positive with that anger. And this is not to be like old spiritual deep stuff, but being real. You angry, now you're going to take the trade and you're going to be like, forget that 3%, forget that 5%. I got to make that 50 back and I got to make my daily goal. Now you're not even following the plan anymore. You're following your emotions and you won't get far invested following your emotions. Okay? So that's the training, you guys. Go ahead and drop some 5s in the chat. Let me see. Go ahead and drop some 5s in the chat if you gain value from this call. All right. If you guys enjoyed this training, I think this was my 8th call for the day. If you enjoyed this training and you learned a lot, drop some 5s in the chat. I definitely appreciate all of you guys showing up. All right. This is going to be a very, very great week. I feel like every week has been a great week since the year started. And it's all based upon what you do that be the determinant factor of how you feel about the week. It could be a great week and you could lose more money than what you made the prior week. And it still could be a great week because you followed your trading plan. While there's somebody else that made a bunch of money, didn't follow their trading plan, and 2 months from now, it's going to recorrect. They're going to lose their whole account. All right. But you followed your plan and you're going to continue to follow your plan. And then a month from now, you're going to be like, dang, I'm glad I followed my plan. Every time I was in competition with somebody else's success or the success that I felt like I wanted and not what I deserved, it's not about what you want. Again, this is the biggest thing that I've realized about people in America. They just want what they want so bad that they don't even feel like they don't think about what they deserve. Like, oh, Josh, I'm not making any money. How much have you studied this week? Did you practice that strategy in your demo account before you just started taking it with real money? No. Okay, so why do you think you deserve to make that type of money? I know you want it. We all want it. We all want to be rich and wealthy. But do we all deserve it right now? No. And that is exactly why we are where we are. So you guys got to be humble and accountable enough to say, like, damn, okay, I'm not doing everything that I need to do to be where I want to be. So let me just start focusing on doing what I need to do. And I know that I'll get to where I want to be. I just did hella meetings today, y'all. Y'all want to see my schedule? Y'all think I'm playing? I got another meeting in 9 minutes, 6 o'clock. Then another meeting right after 6:30. Then a call to do for y'all to break down break down global momentum creators at 7 o'clock. Then after the 7 o'clock, I got a 9:30 with y'all. I've been literally on my phone and on Zoom all day long. Last week, same exact thing. Tomorrow, same exact thing. Right? I don't end every meeting like, oh, they didn't sign up, they didn't join, they didn't do it. Can't focus on yeah, I want everybody to sign up. Is everybody gonna sign up? No. Do I deserve for everybody to sign up? No. Is that even normal to win every trade for everybody to join your business? No, that's not normal. Stop focusing on what you want and focus on what you deserve. I'd keep doing these calls and I keep training. Because I get better every single time I do it. And I know that at some point, because I kept doing it and I got better, I'm gonna get the results of me being better and not the results of me being terrible, thinking that I should get good results because and I'm terrible. That makes sense, y'all. So this is a mindset training and a trading training and giving you guys some steps in managing your account the proper way. I will be dropping this recording on our YouTube channel. Make sure you guys subscribe to Global Momentum Creators YouTube channel. I'm going to start not only dropping the trainings that we do on these calls, but I'm also going to start to drop little short trainings and YouTube videos and things like that that you guys could take value from as well, all pertaining to investing, e-commerce, and everything that we do within Global Momentum Creators. So stay tuned. And if you are somebody who is not a part of Global Momentum Creators and you're watching this call, you're watching this training, and you're learning, you're gaining value, and you want to actually be personally mentored by myself or individuals you want to be with a part of our community, don't hesitate to reach out. We have an open community, really looking to help anyone and everyone who has the desire to win. And I can't wait to see you guys on the inside winning with us. So reach out. All information should be in the description box below. I hope you guys have a good rest of your night. We are